this week itself, it's up close to around 10%. Ajay Vora, head of equities at Nuvama Asset Management, joins us on the show. Hi, Ajay. Good afternoon. Good to see you win. You've got a tinge of blue as well, so we're all on the same side and all set for Sunday. But before Sunday, we need to get through the last 30 minutes of trade today. How are you feeling about the markets? We have discussed this in the past, that Nifty is relatively cheaper now. You have the dollar index that's cooled off as well, and crude oil prices staying, at very, very good levels is a positive for the Indian markets. So what do you think? How constructive are you on the markets right now?
Yeah, hi Nigel, and good afternoon, and thanks for having me on the show. So I think that, we are pretty much excited at this point of time after seeing 5 months of almost negative returns for the benchmark index. And I think if we go back in October 24, since when this whole correction had started, you'll see that, at that point of time, two major factors played out for this whole drawdown for the markets. One was obviously our local slowdown and earnings downgrade, which had started in October, and it lasted almost, I would say, for 6 months, and we are down 10-12% in terms of earnings. And at the same time, there was a lot of optimism in US, right? And therefore, dollar had appreciated by almost, I would say, 10% over a period of 3 to 4 months. And historically, we have seen that, whenever DXY index appreciates, it results in sharp correction in emerging markets. And that is what played out for India as well. But now at this point of time, I think that, considering DXY has also reversed from the levels of 110, 111, considering now there is a lot of uncertainty in US, considering the, I would say, tariff announcements. My sense is that, bottom is very much in place for us. And I think over next 3 to 4 months, we can see a very sharp rally for our markets. Our domestic, factors will also play out big time in terms of what the regulators have been doing. Almost $40-50 billion of liquidity has been injected. And I think even the budget was pretty positive in terms of consumption. So I think everything put together, we have seen the worst, at least in the medium term. And I think we are due for a very sharp rally.
All right. So you are in the camp that the worst is behind us right now from all perspectives. And, from here on, we will see a sharp rally. Just a two-part question. In terms of earnings, what are your expectations over the next couple of quarters? What kind of earnings growth can we see from, the weakness that we've seen over the last 2 quarters itself? And where does the Nifty go to from current levels? I mean, do you have a target here when you say sharp rally? Do we go back to test the previous highs?
So, Mangalam, I think that the way we should see earnings over next few quarters is that, March is anyways not likely to be that great. But from June quarter onwards, we will definitely see a decent uptick led by two major sectors, I would think. One is banking, considering, as I said, the liquidity has been infused and also a lot of pockets on the corporate credit have started picking up. So both put together, I think, banking can be one sector which will deliver above expectation numbers from June quarter. And secondly, if you recollect, last entire year, a large part of the downgrades was led by commodity sector. My sense is that, steel prices have moved higher, even aluminum. So the entire base metal pack and the ferrous, has seen a decent uptick. So that will again lead to some sort of earnings upgrade. So over next, I would say 3 quarters or so, and maybe for the entire year of FY26, we are building in anywhere between 10 to 12% earnings growth. So earlier, if you recollect, the expectation was closer to 1,300 rupees EPS for FY26. My sense is that number will be closer to 1,200 now. And based on 1,200, I think that even if you give a fair multiple of 20 times, once we are back to that double-digit growth, we should be anywhere around 23,500, 24,000 over next, I would say, 6 months or so, because markets are forward-looking. And then once we start looking at FY27, that number is looking more like 1,350, 1,400. So I think the stage is set for back to double-digit earnings growth, and that is how the compounding will take place over next 18 to 24 months.
5 to 6% rally once on the Nifty is likely from current levels as well. 23,500, 24,000 implies anywhere between 5 to 8%. Is that your estimate?
Yeah, so over next 6 months, but I'm saying as a long-term investor, once you start looking at FY27, maybe 6 months down the line, we are looking at around 28,000 over next 12 to 18 months.
Ajay, in the last few days, suddenly there was talk of that grizzly bear returning. I don't think you're in that camp. You're sounding quite optimistic on, the earnings from year on. And that's an important point as well that you briefly touched upon, that Q4 numbers may not be that great, but the commentary will be good because these positive measures by the government of India, by the RBI will gradually start showing up from Q1 of the next fiscal year. And that will be on a lower base. So earnings growth will start coming back from the next quarter. Got that, Ajay. And, my colleague Mangalam in the studio is quite excited about the game. Mangalam, United Breweries, sad one, but it's at the high point of the day. Just take a look at that stock. Zooming away as we speak. The stock was in the red when we started off the show. That's moved to the high point of the day.
I believe that you will be the top contributor to the volume growth this weekend and among a lot of other people as well.
I have 45 days, Mangalam, that, I'm off that. So I'll be in the other camp, the green tea and all that.
All right, so the green tea camp. But, as we speak about this, you just keep an eye on United Spirits as well. It's currently in the red, but next week you have the 10th round of talks which will take place between India and UK. If there is a free trade agreement and if there is some conclusion reached out there, maybe the duties on imported scotch are reduced. That would be positive for the likes of United Spirits companies, which actually import a lot of scotch as raw material itself. But one of the sectors which is actually doing very well all through this week, we saw some risk-on return in high beta names, which had actually seen a big move earlier. It was the likes of defense and the PSU names, etc. Defense stocks actually buzzing once again today. And Upasna joins in to tell us why. Upasna, after this big decline that we've seen, people are finding some value here?
Certainly, Mangalam. Now, defense sector remained in focus today. It is after the sharp correction that we've seen in the prices. Now, Phillip Capital says that the correction have made these stocks very attractive in terms of valuations backed by strong in-house development capabilities. Now on Bharat Electronics, it has given a buy rating with a target price of 390 per share, which is an upside as high as 41% from the current market price. Mind you that the company is a market leader with 71,200 crore of order backlog and a strong revenue visibility. Now, company has updated that it expects order wins of nearly about 12,000 crore by 31st of March. Now, stock is currently trading at 27 times FY27 EPS and currently valued at 51 times. That is on the back of the robust order book that the company has. Now, coming to HAL, the brokerage has given a buy rating on this stock with a target price of 5,550, which is an upside of 60%. Now, the uncertainty regarding the GE F404 engine supply is over, is what the company has indicated in Aero India 2025. And now the company expects these engines to deliver in March and April 2025. So certainly a good news for the stock. The stock is trading at 25 times FY27 EPS, currently valued at 26.6 times. Now coming to Bharat Dynamics, brokerage is given buy rating on this with the target price of 1,400 per share. It says that the supply chain issues are resolved and company is on track to achieve 3,000 crore revenue in FY25. The stock is currently trading at 39 times FY27 EPS, currently valued at 68 times. Now coming to data patterns, it is a stock that remained in focus today. Also, we saw a very strong up move in the stock today. The Phillip Capital has given a buy rating on the stock with a target price of as high as 3,400 per share, which is nearly more than double the current market price. It says that it is a vertically integrated defense electronics player with a strong radar portfolio. The stock is currently trading at 22 times FY27 EPS, valued currently at 50 times due to the robust order pipeline. Now coming to solar industries, even this stock has remained in focus in the past few days because of its order wins. Phillip Capital has given a buy rating with a target price of 12,000 per share and the company is valued at 46 times FY27 EPS. And lastly, coming to Zen Technologies, the company has signed a MOU with TXT Group, which is making the stock attractive. Now, overall, all in all, just summing up in the defense space, the valuations stand attractive, strong order book pipeline, which provides a compelling defense opportunity for the buyers, is what the brokerage has indicated.
Thanks a lot for that, Upasana. Neat wrap of all those stocks that are buzzing around. Ajay, how are you feeling about these defense stocks? They went on the offense, then they cooled off. And boy, oh boy, people were, they used to join in the channels and say that if the stocks cool off a little bit, they didn't cool off. Some of them became half. What's your take, on these defense stocks?
So I think Nigel, see, defense is definitely a very strong structural story for next, I would say, 5 to 7 years. And at some point of time, they were definitely very expensive. I would say that there are pockets which has become reasonable now. And therefore, one should definitely look at it for a long-term investor. It clearly makes sense to enter in at anywhere between, I would say, 20 to 25 PE with a decent, sustainable growth over next 3 to 5 years. So I think it is one theme which investors should definitely participate for next 3 to 5 years.
All right, Ajay, thank you so much for joining in. The key takeaways for us, double-digit earnings growth not too far away. And at the same time, we can't rule out the Nifty moving all the way up to 23.5 to 24,000 in the next 6 months. So